This is the Emmy Award-winning KTLA Prime News.
When the federal deficit grows, so does the resolve of the IRS. There are a few new rules this year to make sure tax evaders don't get away, and a few tips to help you keep your financial house in order.
Dining room, gathering room, kitchen.
A guided tour of Gunter Burgard's latest project, a brand new Cape Cod in Manhattan Beach. His next trick, navigating the tax man.
Every little screw more or less need to be documented, where you got it from and why you want to get your money back and how much they are.
Gunter is a builder. Builders are self-employed, and this year, the self-employed are under the IRS microscope.
It's always been a dangerous area, but it's exceptionally dangerous now.
South Bay CPA Ernest F says when the federal deficit looms large, the IRS aims to collect. The self-employed are a fat target because they pay tax on their profit, not on their gross, and the government likes its money up front. Other changes this year, fire victims in federally designated disaster areas can claim this year's losses against last year's income. This is especially helpful to folks who lost businesses and won't have the income this year to take losses against. To do it, simply amend your 2006 tax return.
If you need the money right now, it gets the money to you quicker. You don't have to wait for the year to end to file a tax return.
$25,000 in our head. Close winning at $220,000.
Beware phantom income. Foreclosure victims who pulled money out of their house may owe tax on that money even if the bank cancels their debt. You may be left with nothing, but the IRS still wants its cut. Ex-wives, ex-girlfriends, ex-employees, listen up. That 10% reward the IRS used to pay if you turned in your favorite tax cheat, it just went way up.
Now the reward is as much as 30% and will include amounts collected, which will also include interest, not just the tax.
Some of the old favorites for trimming taxes still apply. Make a gift to your kids. Donate appreciated stocks. You get to write off the gain without paying tax on it. And dump your losing stocks. You can claim the loss and then buy them back next year. One other big shift this year, if you're counting on your tax preparer to help you play it fast and loose, you may be out of luck because the IRS is bumping up the penalties on them too. Used to be they'd charge tax preparers a couple $100 for each mistake. That figure has now gone up to $1,000 per error. It's a big incentive for them to keep you honest.
And the master bathroom.
That way, no one takes a bath.
That's what everybody's hoping for.
Tax preparers say the IRS is taking a tougher stance, not only to get more revenue, but to discourage folks from cheating in the first place, Leila.